So would you mind taking a couple of minutes to explain how demographics and how you predict the future using demographics?
Okay, number one, I am actually a cycle guy, and I only discovered demographics and cycles when I started moving from being a Harvard MBA consulting to Fortune 100 companies in the early 80s to working with entrepreneurial companies, which you guys will understand. And when I started doing that, I realized their customers were not the aging Bob Hope generation. They were the young, emerging, innovative, new technologies, new spending wave, baby boomers. I discovered that in the early 80s. And when I started looking at these statistics, I'm like, oh my God, that's when I saw that baby boom wave, like, what? This is the biggest thing to ever hit the world in the developed world. And so I could see that boom coming. And at the same time in 1981, the US government started on an annual basis to do surveys of the spending patterns of everyday people from cradle to grave, 600 categories, including the fact that I quickly discovered the average person spends the most at 46 back then, now 47, moving towards 48. So I can predict how a new generation like the massive baby boomers are going to spend more money into 2007 and then slow down. And guess what? The reason we have nonstop money printing is to offset the decline of the baby boom generation. And this is the worst policies ever in history. And these central bankers are, first of all, going to be destroyed by the internet and blockchain technologies, number one. And number two, by being the dumbest asses in history that think you can offset a downturn printing money out of thin air and think it will go away.
How is blockchain going to destroy the central banks?
Okay. So the internet back in the late 80s, early 90s emerged as the way to connect us to information around the world. I mean, this is, okay, so there was personal computers in the late 70s, early 80s, then the internet, now it's blockchain, okay? So what this does, blockchain is the internet of financial assets and money. This is Internet 2.0 in its early stage, and I'm measuring literally the internet and Amazon and now the blockchain and Bitcoin, 20-year lag, same thing. Early stage, baby boom, when it emerges and people think, oh, it's the next big thing. They overvalue it. Then it crashes. You know how much it crashes? 94%. That's how much Amazon and the internet crashed in the early 2000s. And then you have the real boom. Well, at the peak of this real boom of the internet, we're getting Internet 2.0, blockchain, financial assets. What could be bigger than digitizing all financial assets in the world and making them more efficient and easier to trade and greater access to more people? So this is the next big thing. But in the early stage, like 2000, 2002 crash, we're getting the second tech crash, and it's going to be about the crash of the internet bubble, bigger, but this early stage bubble in Bitcoin as well. So I am thinking, listen to this, you could get Bitcoin 90% off in just a year or two, and then I would buy it. Bitcoin goes back to where it's been recently, and then it will, I think it's going to go to 500,000 to 1 million. And only because it's the gold standard of the new digital global monetary system, which, listen to me on this, most important thing in all of history up until this point, governments can no longer manipulate their government and country monetary system by printing more money or cheating or devaluing their currency or whatever. So this is a big deal.
How does blockchain affect the Fed? What is, from your perspective, I just want to know is, because what does it mean? If you were there, what would you say? Okay,
it just creates a new peer-to-peer. Okay, internet, number one, was peer-to-peer communication. Anybody, anywhere in the world could communicate, access any information, anywhere. You know what? You know how many research staff I had 10 years ago before the internet, or 20, because the internet made information easier to access. And I no longer had to say, oh, Jeff, could you find out to me the price of gold back in 1974? No, I would find it on the internet and then have him go into it and dig into it and develop all the charts. 3 times more effective, okay? So that's the difference. This is in financial assets. I mean, we are getting wealthy and wealthier over time. That's what you've been preaching forever. Every day people can get wealthy if they're just smart. In this economy, we created a middle class after World War II. Now we're creating an upper class of people, an upper middle class that actually has financial assets. Even the middle class in the 50s couldn't invest a dime. So this is a big deal, that financial assets and investing can be digitized and made more efficient and more available to everybody. So it's the democratization first of incomes and now of wealth. And what's better than wealth? Screw incomes. Wealth is better. This is about making more and more people entrepreneurial, knowledge professionals, access to information, and be able to work with other people in a way that just would have never been imagined. So again, personal computers, internet 1.0, and now blockchain digitizes all of finance and money. Money is worth more than information.
When I look at what Biden is doing and all this stuff, I was talking to my accountant last night, and he's looking at the new tax changes coming up. He thinks, or his belief is, they want to shut down small entrepreneurs because they threaten them.
I know, and that's not good policy. I agree with you on that. I've been saying we're in a democratic era because once the economy slowed down after 2007, because remember, we've been living off of free money since. The economy really peaked in real terms in 2007, as my indicator said, 20, 30 years before it happened, okay? So they're printing all this money and stuff. So all these efforts, I mean, the Democrats were naturally to come in and help people who were falling behind and stuff. But the truth is, the only way you grow long-term is to encourage entrepreneurs and entrepreneurial investment. I'm known for demographics. You know, my favorite chart is the S curve. Something starts at 0.1%, a visionary, to the 1%, the entrepreneurs that first jump on that and do something with it. And then 10% when it goes mainstream, then it goes 10 to 90. And the same time, it took all that time to prove a niche market. Innovation and technologies and new businesses is the key driver, and demographics, when new generations come along and spend, is number 2. It's still big, but the technology and innovation cycles are even bigger. So the demographics are slowing around the world, but the innovation can still rise here.